Good afternoon, everyone. I am Manupreet Kaur, and we are back on DigitoTalks, presented by Digitopedia, the digital marketing club of Presidency University. Today, we have Bhavika Jain on board with us. She is a finance content creator, a software developer, stock market enthusiast, and a trader. We welcome you, ma'am. So, the first question that we have for you today is: how did you begin your trading career?
Thank you so much for having me, first of all. And so about this question, I, like just like everybody else, had no idea about what trading or investing or anything is. Like all of these terms were a gray area to me. So during COVID and like 2019, I recently started like reading all these new books. And the first book I read was Rich Dad Poor Dad, and I suggest everyone reads this because I know a lot of recommendations come for this, but this book is a lifesaver when you want to start your journey here. So basically, this explains everything in simple terms. And when I read that book, actually, like it kind of showed me the reality in terms like, okay, we've been spending, we don't really actually invest in things, we spend on things which is just depleting our money. So after that, I read a couple of things, did a couple of courses, and started investing live. And that's how I got more and more experience. So yes, that's how it is.
Okay, so even I'm familiar with the book, and like people who might have not read it, they can like start by reading that book, right?
Yes, it's very friendly. It's not like, all these weird terms which you will not understand. It's explained very easily. And if you're somewhere around 2025, you will relate to the book, and it's very nice to read and start your journey.
Okay. So, like, how can one start investing as a beginner?
So I would suggest, first of all, just take three steps. First is open your Demat account. It could be anything, but two places I would suggest is open a Zerodha or a Grow Demat account. Because without that, you can't really invest in any place. So you need that. And secondly, make sure you kind of make a budget, or like it could be anywhere in an app or on an Excel sheet. Just note
Okay.
down how much you spend, how much you earn every month. First, you need to know that and see where, something like where's this money which is going where, like, so that you know what is something you absolutely can't, miss paying on, and see where are your voids. Like some things like movies and clothes and food you can avoid, right? So you can start taking
Yeah.
out a little that money and start saving. And the third thing is, if you don't understand anything, I would suggest investing in an index fund, because you don't need to do any research and you can just start investing right away.
Okay. So, like, can you mention some resources for learning stock market?
To learn more jargon and more about the investment terms in stock market, there are two websites which I would really suggest. One is Varsity by Zerodha. There are a lot of modules. Everything is free. Everything is explained with live examples of, very clear cut examples, so you can understand everything. And second
Okay.
is Grow. It's a new app, but a lot of things are explained beautifully there. So if you're a beginner, don't know anything about money, you can start from there.
Okay. And like, since recession is around the corner, so what steps like should we do to financially face it?
Okay, so to financially face it, first of all, whatever, like if you're somebody who is earning, make sure you save at least, instead of 3 months, make sure you save at least 6 months of your monthly salary, right? So if you're earning
Yeah.
around 50,000, make sure you have 3 lakhs in your bank account. Like start saving to build up that amount in your bank account and work towards it. Secondly, during recession, things get expensive because everything around is not very nice. Not everyone is spending, so things get expensive. So
Yes.
do that, try to spend lesser than you usually would, because when things are expensive, you will spend more money on buying anything, right? And you don't
Yeah.
really have that kind of income. So try doing that. And thirdly, again, if you're in a job, try to sustain and live in the job instead of switching your jobs. So these are the three critical things. And if you're a student, during the recession period, don't try to do anything here and there. Try to learn new skills, because it's not easy to
Okay.
get a job in recession. A lot of layoffs are done during recession. Even if you get offer letters, people are firing a lot of people. So don't get disheartened by that, but try and learn more and more skills so that when the market is better, you actually can grab a much better job than you would have now. So yeah.
Definitely. Yeah. So, like, which funds should beginners invest their money in?
Again, like I was mentioning, index fund, it is something you don't need to do research at all. So, if at all you've been or seen any news about stock market, you would have heard two terms, Nifty and Sensex. So,
Yeah.
Nifty basically top 100 companies or top 50 companies in the country, and Sensex is around 100 to 500. It could depend on what it is. So they track that many companies, right? So index funds will move how the market is moving. So today, if the
Okay.
market has gone up by 10%, your index fund moves by 10%. So there you don't need to do any research. And if you see historically, since stock market has started, Nifty has
Yeah.
always had this graph, like it's always going up. Though
Yes.
there's few dips in the middle, but it's always going up. So
Yeah.
that way, on an average, you can get like around 15% returns every year, and which is very good. And if there's
Yeah.
any who's 18 years old who's going to be watching this video, then I would suggest just invest 1,000 rupees a month in an index fund and just continue this till you're 60 years old, right? You don't need to
Okay.
increase at any point of time. And by the time you're 60, you will end up with 6 crore rupees without doing anything.
So, like, we can start with as like minimum as $1,000 to
Exactly.
invest.
Yeah. And I mean, if you want more, as in when your income increases, start putting in more money and that will grow up to become a very good sum. So I would suggest go with index funds. But if it is something, if you don't want to do research, but if you're somebody who's keen to learn, there are other funds, like there are things called NCDs, there's debt funds. So you can explore these options as well.
Okay. So, like, what is the ideal number of mutual funds to hold, and like, for how long should investors actually hold it?
So again, now it depends on the money you are planning to invest in the stock market. So if you're somebody who's just gotten like 1,000 or 3,000 rupees, I would suggest invest in one
Okay.
mutual fund because mutual fund itself diversifies and puts your money in different places. So
Okay.
again, using multiple mutual funds is not beneficial. But if you're somebody who has a huge amount of money, right, 10,000 to 30,000, then you can invest in different funds. But if you're starting with small
Okay.
amount, just invest in one mutual fund. Again, index funds because it goes in the direction you would want it to. And if you're investing in any fund, basically mutual fund, a debt fund, or anything like that, it's advisable to at least invest in it for 10 to 15 years, nothing below that, because you will not see
Okay.
return you are expecting. These things are meant for long term investments. So if you're anyone who's 20 years old, also by the time you're 35, you'll actually have a huge amount of money by just cutting down a small expense in your life.
Okay. So, like, but how should like investments be distributed between large, mid, and small caps?
Okay, so again, it depends on the amount of risk you're willing to take. If
Okay.
you're someone, so like basically, again, it depends on the risk you're ready to take and the age you are at. So the younger you are, the more risks you can take because you have a lot of time to cover up for it in the future.
Yeah.
So when you're younger, you can take more risk and you can invest in more small cap and middle cap. And as you grow older, you can reduce the amount you've invested in small cap and middle cap and increase it in large cap. But if you're still somebody who's young and don't want to take a lot of risk and be in the safe side, I would say invest majority of your money in large cap. According to me, the
Okay.
ratio, it's basically if you don't want a lot of risk, the ratio should be 60 30 and 10%. 60 large, 30 would be mid, and 10 would be small cap. That is a good
Okay.
ratio of risk profile. So, yeah.